Good evening. I'm John Batchelor. This is the John Batchelor Show. The day after the attack in Boston, of note, the investigation continues. The FBI has 1-800 number to call for clues. There are clues in all directions, but as of yet, no claim of responsibility. As of yet, we're told from signals intelligence, no pattern prior to the attack, the two explosions. Also, to clarify, in war, the first three reports are wrong. Always good to mention even on the second day, but we do now know the two explosions that we heard initially about 3 o'clock East Coast time on the 15th. That's it. There was no third. There was no fourth. There was no fifth device found. There was mixed reporting going on as late as midnight East Coast time. The police commissioner of Boston participated in this inadvertently earlier in the day when he said the JFK library device had exploded and was related. Only two devices. 1, 2. We heard them 13 seconds apart. At the same time, we must move to the ongoing story of the investigation. We will discuss that at great length and in a moment with my colleague Larry Kudlow, but I mentioned this odd detail today emerging late in the day from Capitol Hill. Senator Wicker, Republican of Massachusetts, received a letter, dateline Memphis. The letter was addressed to him, no return address, nothing to indicate the date it was mailed in the reporting, but the letter was mailed from Memphis according to the without a return address, directed to Senator Wicker, and in it was a poison named ricin. It's not an anthrax attack, but in any event, the Capitol has closed the post office at the House and the Senate, and the investigation continues. They seem to be unrelated events, but we mention them here because in a war, all facts eventually can collide. Larry Kudlow of Kudlow Reports at CNBC, my colleague and co-host, also Kudlow Radio on the weekend. Larry, a very good evening to you. The market sold off yesterday in anxiety over the early events. The market was still open when the attack came through, and before market close at 4 o'clock, it was down several hundred points. But it rallied nicely today, and it seemed to be stable, nothing like 9/11. Good evening to you, Larry.
Good evening, John. Well, sure. I mean, this Boston bombing is nothing like 9/11, so the market had a relief rally. By the way, I just wanted to know, the market sold off yesterday way before the bombings because of the collapse in gold and perhaps some other reasons. But it did come back today. And I think everybody on Wall Street is like everybody else, including the two of us. People are trying to figure this Boston story out. What is it? How big is it? Is it going to spread? Things like that. The information is very scarce, as you noted. So I don't want to read anything into the market at all. In fact, I asked my panelists tonight, is this the sort of thing that would cause a much-awaited correction in the market? And they weren't sure, because no one can be sure, and no one can be sure what this is all about. And unfortunately, I have no enlightening information either.
I agree, and so that's why I want to pay attention to what we can speak to, which is the market rally, not just today, but over these last weeks. And Larry, you mentioned gold yesterday, but you have taught me, Mr. Kudlow, and I have applied this lesson, so I ask for you to restate it, that a strong dollar is a strong economy. And one way of talking about a strong dollar is a sell-off in gold. Perhaps, the gold sell-off also indicates that the Federal Reserve's QE programs these last years is either coming to an end or is no longer effective. Can we take this market rise and gold sell-off as bullish, Larry?
Well, yes, of course. But let me just talk about gold for a second. Which is, I think at the moment, a really interesting story. Gold is plunging. I know it stabilized a little bit today. And if you ask me, it's a long overdue plunge, because the rally in gold to $1,900 at one point in 2011 was based on catastrophic assumptions, John. Things like the world is coming to an end, the financial system's coming to an end, the dollar is coming to an end, the euro is coming to an end.
End of the world.
End of the world. You know,
right.
The American economy is coming to an end. And Bernanke's money supply policies are going to create a massive inflation. So, as it turns out, really none of this happened, okay? That's the important part. The world has not come to an end. And although I have not been much of a fan of Bernanke, I will say this. There is no inflation. I mean, we got an inflation report today. The CPI actually fell a bit. It's 1.5% year on year. One of the flaws in the gold argument is that the money supply creation by the Fed was going to drive up inflation back to 15 or 20%. Ain't happened. Hasn't even remotely happened. And so I think that gold was an accident waiting to happen. What triggered it? Maybe Cyprus selling gold to raise reserves to pay their debt. That might have done it. But that just would have been the trigger. Gold has been an accident waiting to happen. And I like it because I remember in the 80s and the 90s, gold collapsed from 800 to 250. And those were periods when inflation was conquered, real growth was spectacular, the stock market was spectacular. And my point is a simple one. Gold down is a good thing. It means the dollar is up, but it also means people would rather invest their money more productively. Gold up is not a good thing, because that means the dollar is down and people want to just play it safe and invest in gold. So I myself am arguing somewhat against the tide right now that the gold plunge is a good thing and it's an optimistic thing.
Well, I want to encourage you against the tide, because the implicit in what you just told me is that if money's coming out of gold and if people are looking for investments now because they're no longer frightened of the end of the world, the end of the galaxy, the asteroid's going to end all of it, that means that the money can flow into productive places, which is the stock market, to put it in the hands of those who hire, those who develop, those who pursue growth. Is that also part of the formula?
Well, it should be. It should be. I mean, the stock market is a good place to start. People could put their money directly into new businesses. A lot of that in the 80s, particularly in the 1990s. I mean, gold is not a productive asset. It doesn't have a yield, and you're just banking on the world going to hell so the gold price goes up, or you're banking on a 20% inflation rate. So at the moment, it has unsettled the market, as these plunges will, because it did take people by surprise. But on the other hand, I think in the longer term, I mean, look, the American economy is growing 2 to 3%. It ain't great, but it is growing. The inflation rate is low, profits are high, businesses are in good shape, okay? I have many quarrels with Washington's policy under Obama, many quarrels, because I think they're holding back growth. But the reality is the American economy, which is very resilient, and the American business community, which is also very resilient, is producing. And it is hiring, however erratically. So things are okay, and I'm not worried about the stock market. There may be a correction. I'm not worried about the stock market, and I'm pleased at the drop in gold.
And right now, can we say that because gold is selling off, because the people are around looking for opportunities, that one interpretation of the market's rise in these last weeks is that the market has correctly discounted, taken into account the future? In other words, that it is a forward-looking enterprise, and the bullishness indicates that there are better days ahead, and that the spring swoon may be abridged this time. Is that a possible conclusion?
Yeah, it is. I mean, the stock market has done a lot better than the economy.
Right.
And the reason for that is profits. Profits are the mother's milk of stocks. So that's the health of American business, which is a very key cornerstone of this whole story. I don't know if the economy can break out of a 2 to 3% range. I'm not 100% convinced of that yet. I do, however, think business is in good shape. They're very cautious, John. They're worried about Obamacare. That's another regulatory and tax problem that's coming up, and they're worried about tax the rich. Obama's budget, I thought, was just perfectly dreadful across the board, which, by the way, had hundreds of billions of dollars on businesses, taxes on businesses, which is just terrible. So, you know, the stock market is telling us we're going to be okay, but the stock market's doing a lot better than the economy. That's about as much as I can say.
Larry Kudlow of Kudlow Reports at CNBC and Kudlow Radio across the nation on the weekend. We turn to the economy next and the vital signs from Sudeep Reddy of the Wall Street Journal. I'm John Batchelor.